things. Actually, the earnings report, as you both know, it was actually pretty solid, but it was the color, the look forward, the idea that advertising spending in next year could be a little bit weaker on the macro concerns and the uncertainty that sent that stock down. Alphabet had been down so much 2 days ago on the weak cloud, down for a second day, not getting a bounce back. That's a fancy way of saying that the New York FANG index down nearly 3%, and all of this putting the NASDAQ 100 into a correction. So right now, just taking another look at Amazon, investors like it. The stock is continuing to trade higher, up 3.8%. And maybe it is just the pure 3Q net sales beat a piece of it. The cloud, even though it looks a little bit like what I'm looking at, the AWS net sales 23.06 versus 23.13. It's small in terms of the operating margin. That's probably what investors really like a lot too. 7.8%. Versus the estimate of 5.5%. This company is known for sacrificing profit and margins when they want to invest. They didn't do that, and investors probably like that conservative stance.
That's like old school Amazon,
Yes.
Years and years of not making profits,
Yes.
just making investments. Abigail, speaking of making investments, Amazon to hire 250,000 seasonal employees in the U.S. Speaking of other investments, third quarter 2023 gain from investment in Rivian is also being highlighted in this quarter. I want to take a step back, though, and get your thoughts on the S&P 500, Abigail, and what you're seeing when it comes to technicals, because we closed today below 2150. We closed at 4150. We closed below at 4137 today. What are your thoughts on the technicals here?
It doesn't look so great, truthfully. I mean, there's no real way to make this picture look pretty. And I'm going to bring in the Russell 2000. We've been talking about it for weeks. The Russell 2000 almost in a bear market, down about 18%, well below its 200-day moving average. The S&P 500 has been rustling tug of war with its 200-day moving average over the last week or so. Yesterday, decisively below it. Today, decisively below it. Not yet in a correction, close to it. But again, the NASDAQ 100 is. Most signs point to lower, and it's really interesting because we've had this micro picture way on these indexes, even ahead of the Fed. I mean, at the end of the day, in my view, it's always going to be the Fed, and if they continue to signal, which there's every reason to think that they will, that they're very comfortable kind of hanging out higher for longer, even if that doesn't mean a hike. That, of course, puts pressure on risk assets because it takes liquidity out of the system. And then you add in the geopolitical tensions, and there's a lot for stocks to worry about it. And it's not the traditional climbing the wall of worry. We obviously are not climbing the wall of worry. We're sliding down. We're not taking the elevator yet, but back to your question around the technicals look like the elevator could be coming into play soon, which means a fast drop.
All right, continuing to watch Amazon, still up, about 4 or 5% here in the aftermarket.
4.3%.
We care about a name like this because it's about 3.1% of the S&P 500. It's a bigger weighting in the NASDAQ 100, about 5.2% and 6% of the NASDAQ overall. So in terms of the impact, it definitely matters. Another headline, crossing Ford withdrawing its full year guidance. So that's kind of interesting, and that probably has something to do with the strike.
Yes.
We saw General Motors do something similar earlier this week.
So not surprising
but still,
to see
shares
that.
of Ford down 4.5%, bouncing around down 3.9% in the down 3% in the after hours, I should say.
Yeah, continuing to feel the impact. Again, Amazon, mixed results. I'm looking at Spencer Soper on our live blog. Revenue and earnings beat guidance, and Amazon Web Services revenue missing slightly. Abigail, before we let you go, some final thoughts, and as you think about tomorrow's trade, in terms of how it maybe potentially trades off as Amazon. It's an important company. It's an important stock. It moves the market.
It certainly does. And I'm gratified to hear one of our colleagues saying that's a mixed quarter, because I was thinking to myself, what am I missing here? It doesn't look that great to me. It actually looks less solid than Meta's quarter. It's going to really be interesting what kind of color they give on their call. I think that one thing that investors are hanging their hat on is that operating margin beat. That's pretty solid. They seem to be looking past the slight cloud miss, coming off the highs, down up one. It's, now it's slipping. It's up 1%, slipping from its highs, I should say. I wouldn't be surprised if we see this thing reverse quickly. And I think the big takeaway this week is that the big tech names that are up so much this year, they haven't put up quite enough for the third quarter to keep those gains going. And you put that in against a rising rate backdrop, and creates declines for stocks overall.
I was thinking the same thing, right? They weren't necessarily all positive or all negative or one company alone. It was very much mixed, and it was hard for investors to kind of figure it out. Abigail, so appreciate your overall take on the market, and then also squeezing in what we're seeing in Amazon. We're going to stay with Amazon for just a moment since the stock continues to move higher in the after hours, now up about 3.3%. Carmen Reinecke is Bloomberg News equities reporter. She is on the phone in our New York City bureau. Carmen, what are you seeing in these Amazon results that you think our audience needs to know about?
Yeah, so really the big number that everyone, at least we were watching here, was that AWS net sales figure. It was a slight miss, but investors seem to be overlooking that. You know, the stock jumped as much as 5.7% in the after hours period. Now it's down a little bit from that, up about 3.5%. So it seems like, you know, the top line, the net sales beat for the third quarter is enough, at least right now, for investors to stay, you know, excited about Amazon's results. I mean, obviously that could change. We'll see what they say on their earnings call. But right now, things are looking pretty okay.
Yeah, an important caveat always, of course, is, you know, these numbers are just numbers before the call. We always have to wait until we hear from management on that call. But Carmen, I'm confused because I thought Amazon was all about the cloud. I thought that's what, you know, that's what investors wanted to see.
That was yesterday's story, apparently.
I guess it was
really
yesterday's
was,
story.
yeah.
AWS Nets, yeah. Well, so why are investors overlooking this?
You know, I think we still need to see a little bit more about like what's going to play out. Obviously, after both, you know, Google and Microsoft results, you know, we really thought all eyes were on cloud, and that really has been the biggest thing for Amazon. I guess, I mean, you know, the miss was very slight, and it did show that there was growth year over year. I mean, that's something that could be important here. Investors might be saying, okay, well, you know, it's a miss, but it's pretty close. It might be showing that there is some acceleration from sort of the bottoming that they saw in the second quarter. So, you know, looking at the sort of move back to growth might be enough to sort of garner excitement here. And yeah, you know, as we said before, what happens on the call is going to be really important. And I think what they say about cloud and what they're seeing in that unit is going to be like particularly, important.
Andy Jassy, in the press release, we said we had a strong third quarter. Our cost to serve and speed of delivery in our stores business took another step forward. Our AW growth continued to stabilize. Our advertising revenue grew robustly, and overall operating income and free cash flow rose significantly. So just kind of looking for some commentary. Carmen, we so appreciate you weighing in on it and just tracking Amazon for us here in the aftermarket. We're going to switch to Intel.
Yeah, shares of Intel are surging right now. Intel seeing fourth quarter adjusted revenue coming in between 14.6 billion and 15.6 billion. That is above estimates of 14.35 billion. Also, fourth quarter adjusted EPS is above estimates, Carol. So we're seeing the stock move more than 6% in the after hours.
All right. So watching the earnings, we'll continue to bring them as they cross the Bloomberg. But we do want to, we know earnings certainly front and center right now, especially in the blackout period as we wait for the next Fed meeting. Having said that, one of the things we continue to talk about here at Schwab Impact 2023 is all about the fixed income market. Higher for longer rate environment. We heard Janet Yellen, former Fed official, head of the Fed, obviously, U.S. Treasury Secretary, making some comments. Well, it continues to be top of mind for investors. And what's interesting is Schwab has actually done, Schwab Asset Management, a survey specifically on ETFs. They do it an annually survey, and it's called ETFs and Beyond. So we want to bring in David Botzett to talk about it. He's head of equity product management at Schwab Asset Management with us in Philadelphia. I'm stumbling through because I want to get to you. There's a lot going on. This is our world, so forgive. We're going to watch earnings and bring them to our audience. But you guys did do a survey about millennials and ETFs. Tell us about that and what you found.
Yes, so this is a survey we've been doing for over a decade. So not only do we get great results this year, but we can compare it to past years. And one of the things we're seeing, you mentioned fixed income, is the increased interest and familiarity with fixed income ETFs. And millennials in particular using more fixed income in their portfolios than what we're seeing from Gen X or baby boomers.
I mean, is there anything hotter out there right now than TLT?
There isn't.
Okay, that's what I thought. Let's just get right to it here.
Yeah, I mean,
even though losses, you know, anyone who's invested in TLT this year has just gotten hammered.
They have, but right, you're really thinking about the future. You mentioned the Fed. Where are they going? Are they stopping? Clearly, we're on the precipice of perhaps a pause. We're closer to the top. We don't know if it's the top, but I think they're looking at where do I position my portfolio for what comes next?
So
not
when the
knowing-
millennials start talking about fixed income, is it just mean that the era's over and it's time to? Sorry,
You're saying
millennial.
you're saying it's peak?
I'm saying, have we hit the peak? No, I do wonder. Like, how do you guys read and interpret that?
You know, when we think about what the millennials have gone through, think about the great financial crisis. You know, some of the older millennials have hit the tech boom and bust. They've seen what their parents have experienced, and in some cases, we believe they're a little bit more conservative with their allocations than what we're seeing with the older generation.
They are conservative. You know, it's funny. I was listening to, I think, the team on surveillance, or maybe it was Paul and Matt on markets today. But this whole idea of you have this generation, the millennial generation, that came out of the crisis.
Yep.
That was really rough. They saw maybe the impact on their parents. They saw themselves if they were entering the job market, not easy. And then to see kind of coming out of the pandemic.
Do you want me to keep going? Student loan debt.
Yeah, I
has just
know.
been crippling
You're
for
pretty
us.
bummed out, right?
Yeah, like I mean, you know, then you try to buy your first house, and then mortgage rates at 8%.
Well,
Things have been pretty great.
But let's look at the flip side. Suddenly, income is part of fixed income investing again. So we're out of a zero interest rate environment. You're looking at duration, you know, intermediate term, 5-6%, depending on where you're going. So it's a much more attractive opportunity in your portfolio today than it was 2 years ago.
Okay, there's a glass is always half full approach.
I
like
always
that.
do wonder what you guys do with like these studies, and like, you know, we've been talking to many members of the Schwab investment team, you know, who are looking at the markets and trying to figure out what goes next. Jeff Kleintop talking about like overseas, like non-US, how you know maybe it's time to start looking at it. So does it mean that in terms of the thinking and strategy, this whole idea of fixed income, right, that it is going to be a strategy that sticks around a lot longer than everybody maybe anticipated?
Absolutely. So from an asset management standpoint, for Schwab Asset Management, we use this type of data to inform the type of things we want to bring to market.
Right.
You know, earlier this year, we launched the Schwab High Yield ETF. And recently, we reduced the expense ratio to 3 basis points of that product, responding to client needs.
Does it just go to zero eventually?
I don't think it goes to zero.
Is there a race to zero?
I think we're getting very close to the bottom, right? There's always going to be costs that we're going to need to be able to cover for the product, and we're going to need to have an expense ratio that's going to cover those costs.
But that makes it tough, right? You have to be very careful in terms of the pricing.
You have to be very careful, and you've got to price at a level that you're expecting a certain asset level to get to.
You know, one of the things that we keep hearing too, and I feel like we heard it for a while, David, and then I felt like it went away, but this whole idea of personalization in terms of portfolios. Did stuff come out of the survey on that as well?
Yes, it has greatly. So that's one of the questions we ask is about personalization. And when we think about the personalization, we think about it in a couple different ways. One is what type of ETFs investors are using. So using things like thematic ETFs to get exposure to specific areas of the market where they may not want to take the individual stock risk of an Amazon, a Ford, an Intel, right? But they want exposure to that industry very narrowly within their portfolio. So thematic is a play. Other things like ESG is playing forward as well.
Is ESG as attractive or interesting to millennials or others at this point?
Yeah, I think
you know the reckoning, and we all keep talking
Yes.
about where people want to really kind of understand what exactly is ESG, so that when I invest, what is it really doing?
I think that's one thing the industry continues to be challenged with. Everybody defines it in a different way. If we had a common nomenclature that everybody could get behind, it would be
Right.
much easier.
Does money back off because as a result?
I don't think so.
It's also performance. Like I think
It is.
when it was a cheap money environment, everything seemed to do well.
It did. But you still look at that differentiation by demographics. The younger generation continually looks at that opportunity, and they want to be closer to investing as their values.
How long do you think we're going to be in a high rate environment?
Oh
If
boy.
he knew, he would not be talking to us
Yes,
right now.
he would still be hanging out with us. We're cool. We talk about TLT. We talk about new ETFs.
So I don't know how long we'll be in a high rate environment. I sat through a session yesterday, and they asked the group of RIAs that were in the room, how many of them thought interest rates were going to come down from the Fed in the first half of next year?
Yeah.
I'd say it's probably 10-15% of that audience.
Okay.
They asked about the second half of next year.
Was it-
It was like 90% of the audience. So I think
Interesting.
it's telling from the community and from the professionals we have at this conference what their view is.
Yeah, but remember, was it earlier this year that if you had done that, you probably would have got the same response? Like when the regional bank crisis.
That is very
and so
true.
forth?
Very
so
true.
It's just been a tricky environment.
It is a very tricky environment. The numbers came out this morning. The U.S. economy much stronger than anticipated. I don't think anybody's necessarily
And yields went
expected.
lower.
Yes.
So it's really fascinating. Great to check in on the survey. Thank you so much. And thanks for your patience as we were going through kind of all of the earnings.
Completely understand. Thanks for the time.
So appreciate it. David, be well. David Botzett, he's head of equity product management at Schwab Asset Management, on site with us here in Philadelphia. We continue to track. What do you got?
Yeah, Intel stock up more than 7% post-market. The company seeing fourth quarter adjusted EPS coming in at 44 cents, where the consensus was 30 cents.
Yeah, so continue to track and just keep in mind that these are certainly, I look at something like an Amazon. What's Intel doing?
Well,